Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The focus of my presentation and the focus of the Options-Doug chat channel and Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And just to be clear, when I talk about setups today, I will be talking about an underlying asset like futures or Apple stock or Tesla stock. And setups can be taken any number of ways, with shares, with futures, or with options, and single options, buying or selling, and option spreads. So there are a variety of ways to take these trades that I talk about. My analysis and is primarily based on the options market, my planning and preparation, but the setups, again, I will be talking about just an underlying asset. And questions and comments are welcome, and I will be watching the Options-Doug chat channel in Discord and the chat on YouTube for your questions and comments. So again, please post your questions and comments. It'll make it more interesting for me and hopefully for everyone else as well. All right, let's get started. So what I want to talk about today, my agenda for today, is first of all to go over the news for the week, and then I'll talk about positional analysis, my planning and preparation for the day, and then I'll talk about setups. All right, so the news items, beginning with yesterday afternoon, Apple did report earnings, and let me just check. Apple reported earnings after the close yesterday. Apparently traders and investors like what they heard, and right now Apple is up about 4.8% on the day, and that is certainly having a positive impact on the market. And then also today the employment report came out at 8:30 a.m. Eastern Time, and here's the results. So the number came in higher than forecast, and about actually slightly higher than the previous number. So higher than expected, higher than the previous number. And then also the employment rate was lower than forecast and lower than previous. And JEC notes that one of the FOMC members, Bullard, there was a speech at 12:15 that had some interesting information. Okay, so that is the news for the day. Next week, there are a number of employment data points, data releases. I think the primary is the CPI. But anyway, I'll go over that on Monday. All right, let's talk about positional analysis now. And again, this is my planning and preparation, and I'm going to focus on levels first. So this is the S&P 500 futures in Bookmap, the ES futures. And you can see it's a very bullish day. And before I dig into this chart too far, let me take a look at a larger time frame. So this is SPX, just showing price and key gamma levels. And let me just zoom in on this just a little bit. I'm going to start with, I'm going to zoom in here. So this is just showing the month of April. So you can see that SPX traded in a very narrow range for most of April, and that started to expand last week, with this move down to about 40.50, and so far the high is around 41.87. And so again, SPX, the range has expanded a little bit, but now SPX is trading once again in the 4100 to 4150 range. All right, let's take a look at some of the key gamma levels. And these are provided to Spotgamma subscribers for a variety of platforms. And again, we're looking at Thinkorswim here. And this is the put wall at 3900, SPX 3900. That's the strike with the largest net negative gamma that can be expected to act as support. Here's the volatility trigger at 4090, and that did move down slightly today. And that is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative, and they have to trade with price to hedge their delta exposure. And that tends to enhance or increase volatility in a negative gamma environment. And then on the other hand, in a positive gamma environment above that level, market makers' position on the gamma curve is positive, and they have to trade against price to hedge their delta exposure. And that's the current environment right now. It actually, market makers' position on the gamma curve begin the day as negative. And we'll talk more about that in just a minute. And then finally, here's the call wall. That's the strike with the largest net positive gamma, and that can be expected to act as resistance. And one level I forgot to mention is the key gamma strike or absolute gamma strike. That's at 4,000, and that's the strike with the largest absolute gamma. So there's the put wall, the absolute gamma strike, volatility trigger, and the call wall. And those are the primary levels, key daily levels that I follow for all the instruments that I trade. All right, so that is a larger time frame. And note that SPX is now trading above the lower edge of the expected move for the week. That's shown with this dashed purple line. And I had something to do this morning, so I did not get the daily expected move for SPX today. So I'm just showing the weekly expected move here. All right, so that is the larger time frame. Let's take a quick look at a shorter time frame. We'll go to another Thinkorswim chart, and this is SPX just for today. Notice the strong up move at the open, and again SPX is trading above volatility trigger, now on a positive gamma environment, and also above the lower edge of the expected move for the week. So it has recovered that lower edge of the expected move. And note that level did act as support briefly this morning. So those are the levels that are in play for today. And note here is the 4150 level up above, and the 4150 to 4200 level has acted as resistance quite a bit. for quite a while, I would say. All right, so here's a Bookmap, and we can see some similar levels. So I have two columns of notes or levels shown here. The first, these are the Spotgamma cloud notes, again provided to Spotgamma subscribers for a variety of platforms, showing the primary SPX levels, also combo levels. There are none in play here. So this is the volatility trigger at 40.90, and note there is a difference between the price of ES, the ES futures, and SPX. Spotgamma is using a 17-point difference, and I calculated that point difference this morning at about 15 points. So it's around 15 points. So there I'm showing the 40.90 volatility trigger at ES 4105. And that did act as support briefly this morning, and now price is continuing to rally higher. And I'm also showing, this is for ES, the upper edge of the expected move for the day, and this was set yesterday, so this is correct. So price is trading above the upper edge of the expected move for the week. Also above the 4100 resistance level that was noted in the Spotgamma AM Founders Note, and the 4110 resistance level. And let's just scroll up just a bit and see what's up ahead. So the next levels of interest above, here's the ES 4150 level, and then the SPX 4150 resistance level. So if the rally continues, those levels could potentially be in play. But if the larger traders with their iceberg orders, and the last time I checked on Hero, traders have been taking negative delta positions all day. Also the cumulative volume delta is weaker, shown by the dark blue line, and larger traders are selling strength with iceberg orders, large iceberg orders they use to hide their size. But it appears to be at least stop orders helping to fuel most of the move higher, and it looks like stop orders now are helping to again fuel the move higher. All right, so that's the S&P 500, and let's take a look at NASDAQ now. And for NASDAQ, I'm going to take a look at QQQ. And this is just a 1-day, 1-minute chart showing the levels that are in play for today. And so far, QQQ has opened above this L2 level at 318 and is now also above the 321 level, or 320 level, this large gamma 1 level, a very important level of gamma at 320. And 320 was actually, not a level yesterday. Now we'll take a look at the gamma levels in just a minute and see exactly where those levels come from. All right, so that is ES. And then we looked at QQQ, the gamma levels that are in play for today. And then here's NASDAQ. Again, trading above the upper edge of the expected move for the day. and now trading just below the 13,300 level. So big rally in the morning, consolidation, early lunchtime chop, and now the rally continues. All right, let's talk about shifts in levels. And for SPX, the volatility trigger shifted lower from 4110 to 4090, and the call wall shifted higher from 4200 to 4300. While I'm talking about this, let's just go ahead and take a look at the gamma levels. So this is SPX. So put wall remains at 3900. That is the strike with the largest net negative gamma that can be expected to act as support. And there's the 4000 key gamma strike, or absolute gamma strike. Strike with the largest net or absolute gamma. Here's the 4100 level, significant amount of gamma at that level. 4150, and then here's 4200. That's the call wall. Actually, the call wall is up at 4300 now. So that's the strike with the largest absolute, or net positive gamma. All right, and what this chart is showing, again, these are gamma levels. The orange bars are showing positive gamma or call gamma. That's above the zero line. And the blue bars are showing negative gamma or put gamma. So blue bars, negative gamma or put gamma, orange bars, call gamma or positive gamma. Those are market makers' positions at those strikes. So way up here is the call wall, several significant levels of gamma down below, then the absolute gamma strike at 4000, and the put wall at 3900. All right, let's take a look at SPY. And for SPY, the volatility trigger shifted lower from 411 yesterday to 408. And the call wall shifted higher to 420 now. And again, that's the strike with the largest net positive gamma. It can be expected to act as resistance. And then the key gamma strike shifted lower, down to 400. And that is also the put wall. So 400 is the put wall, the strike with the largest net negative gamma, as well as the strike with the largest absolute gamma. And the call wall now has moved up to 4020 from 415 yesterday. All right, so that's the S&P 500. Those are the levels, key gamma levels in play for the SPX and SPY. I'm going to have to do a refresh. Then we'll take a look at NDX. Let's go to NDX. And there's the 12,975 strike. And that strike is the key gamma strike as well as the call wall. And that's really the only amount of significant gamma for NDX. And then for QQQ. There's the 315 strike. That is the key gamma strike. That's pretty obvious. Strike with the largest absolute gamma. And then the call wall has moved up to 330. Or actually remains at 330. So for QQQ, the volatility trigger did shift lower from 319 yesterday to 317 today, and the put wall shifted lower from 315 yesterday to 310. So the put wall is lower. The The key gamma strike remains at 315, and then also the call wall remains at 330. All right, so that's the S&P 500 gamma levels, SPX and SPY, and then the NASDAQ gamma levels, NDX and QQQ. I want to take a look at one other chart, and this is the Vanna model. And for those of you who have seen this before, I apologize. I think it's important, so I'm going to go over this again. And what this is showing is how market makers' delta notional, shown on the vertical axis, changes with price, shown on the horizontal axis. There are two curves on this chart, and the first, this light gray curve, is just showing how market makers' delta notional changes with changes in price. And what this is showing is when price increases, market makers' delta notional increases, and they have to sell futures to hedge their delta exposure. And that is typical of a positive gamma environment. And then on the other hand, if price decreases, they have to sell futures to hedge their delta exposure. And again, that's a negative gamma environment, and they would be trading with price. All right, there's another curve on this chart. This kind of pink-purple curve shows how market makers' delta notional changes with price and implied volatility. And this is really the one that you want to look at. So that change in delta with the change in implied volatility is the Vanna effect. So what this is showing is, first of all, if price increases, market makers will have less delta to hedge on the way up than shown by this delta only curve. And also, up to a certain point, as price rises, market makers can actually sell futures. And so they would be adding to price, they would be buying futures as price increases up to a certain point. And that point is about, it flattens out about 41.30. Let's just see where SPX is trading now. Right now, that's about where SPX is trading. I've got 41.28 right now. So right around this level. And above that level, market makers will need to start selling futures to hedge their delta exposure. And then on the other hand, as price starts to move lower and implied volatility, as price starts to move lower and implied volatility increases, this pink-purple curve is showing that market makers will have more delta notional to hedge than just predicted by this delta only line. So again, the pink-purple curve is really the one that you want to take a look at. So this is going to show you how, as price changes, and this is based on positions at the beginning of the day, this shows you how market makers are expected to hedge with changes in price and applied volatility. All right, so RJ asks, does Spotgamma show net delta per strike, i.e. call minus puts gamma per strike? I'm not sure I understand your question. So this is showing gamma. Whoops. I'm going to have to refresh. So this chart, the absolute gamma, is showing gamma. And RJ, I guess you're asking about this chart. So you're talking about net gamma, I guess. And as far as I know, no. You would have to, I guess, do the math yourself here. So they're showing call gamma and put gamma at every strike. All right, let's take a look at one other thing, and then we'll start to take a look at some setups. I'm going to take a look at the Spotgamma gamma index, and this is what I'm looking at now to get a sense of market maker's position on the gamma curve. And this is it's a proprietary measurement of the total amount of market gamma. And so a negative number indicates market maker's position on the gamma curve is negative. And again, our negative gamma environment, they have to trade with price to hedge their delta exposure. And that tends to enhance volatility. So after today, I expect this number, these numbers to shift positive, if the rally, especially if the rally continues. So these numbers did, for SPX and SPY, did decrease from yesterday. So pretty much negative across the board. All right, so that sets the stage for the day. That was the planning positional analysis. So going in today, we know there were shifts up, higher and lower in the key gamma levels, and also that Apple reported earnings and was trading higher pre-market, and also there was a positive reaction to the employment report. All right, let's take a look at some setups now. And I'm first going to start with options traders and see what options traders have been doing today. This is the S&P 500 hero signal. This is showing options trades and market maker hedging activity for SPX, SPY, XSP, and ES futures combined into one signal. So the price is shown with a white line, and the hero signal, hedging impact of real-time options, is shown with a purple line. So it looks like options traders were fading this move lower up until about just about 1 p.m. Eastern time. Then they shifted and started taking positive delta positions. All right, let's take a look at the individual components of this, and then I'll open this up and take a closer view. So if you were looking at hero for S&P 500 for a confirmation of trend today, it did not provide much help. And like I showed before, the cumulative volume delta was trending lower, as well as iceberg orders. All right, so let's take a look at, first of all, we'll take a look at SPX. And now that has shifted. We'll go here. So around 12:30, it was still negative. I'm looking at the notional value here. And again, this is combining now calls and puts, market maker hedging activity for SPX only. And now it has shifted bullish. So that number shifted from about negative 300 to positive 400. So that's SPX. There's SPY. The number is still negative at around minus 1 billion, but it has shifted to moving higher. And then here's the ES futures. And this number is negative, but pretty insignificant compared to, that's like, well, it just shifted to about negative 1.7 million versus negative 1.04 billion for SPY. So pretty insignificant contribution today from ES futures. All right, so let's go back and take a look at the total signal now. We'll zoom in and let's see what traders are doing. So first of all, we'll separate out puts and calls. And this is the orange line is showing calls. That number is positive. Showing on net, traders are buying calls today, and they're also buying puts. That number is negative. And according to this, the put buyers are more aggressive slightly, minus 2.2 billion versus positive 1.78 billion for call buyers. But obviously the call buyers are winning today. All right, let's go back to the total signal. Let's see what the 0 DTE options traders are doing, and very similar to the total signal. In the total signal, all expirations is shown with a purple line, and the 0 DTE options are shown with the this kind of green line. All right, so there's the there's the signal for Hero. Again, it kind of shifts up to an uptrend or around 130, something like that. All right, let me check for questions. All right, so there's a question in YouTube. Are we able to take a look at the NQ gamma? And there's no there's no information for NQ. We looked at NDX and QQQ gamma. And that's the same for the S&P 500. For the S&P 500, we looked at SPX and SPY. Now, the Hero signal for the S&P 500 does include the ES futures, but I don't think the well, I know the NASDAQ signal just combines NDX and QQQ, and I just showed in the S&P 500 the Hero signal. So the current gamma levels, if that's what you're referring to, those are all expirations, and Spotgamma does show the next expiration as well. And again, for SPX, SPY, NDX, and QQQ. So what I was looking at earlier was the gamma levels for all expirations. So I hope that answers your question. All right, so here's NASDAQ. Here's the total signal. And it is now slightly positive. We'll zoom out to the entire day. I'm going to zoom in on the morning a little bit. We'll get a little bit more clarity. So it was pretty much a confirmation of the uptrend, a better signal for trading today than the S&P 500, with a slight dip and then a strong move higher. And RJ, yeah, we'll take a look at VIX in just a minute. All right, so this is the NASDAQ. Let's go, well, we were talking about the S&P 500. Let's go take a look at at the S&P 500. I'm going to zoom just a little bit. So there was when we cut out that first half hour or so, there's a stronger confirmation between hedging flow and price action. Hedging flow continuing lower and price, this is starting around 1045, price chops around in this kind of an extended lunchtime chop. And then as Hero starts to move higher, price moves higher as well, or vice versa. All right, that's the S&P 500. Let's take a look at NASDAQ. And again, I thought this total signal for NASDAQ that combines NQ, NDX and QQQ provided a stronger signal in the morning, except for this dip. Let's just see what traders were doing. So they're buying calls and buying puts. Zoom in a little bit more. So for the first hour, it's pretty clear that call buyers were driving price higher. And I'm looking at the total signal for the day. So it helps just to zoom into the portion of the chart that you want to look at. So here for NASDAQ, call buyers were winning, positive 384 million versus minus 225 million. So they were buying calls and buying puts. Call buyers are winning. And let's go take a look at the chart. We'll zoom in just on the first, up until about 11, first couple of hours. We'll take a look at for NASDAQ. Let's go to Bookmap, go to NASDAQ. We'll zoom in from about 9 to 11. That was the primary move higher. So we know for this move, this is definitely bullish order flow and bullish hedging flow. So we just saw that traders were buying calls, NDX and QQQ, and that would be mostly QQQ. And the subchart shows what is pretty obvious on the chart, that large traders are buying icebergs, buying with iceberg orders they use to hide their size, and that is shown by this light blue line rising. And cumulative volume delta is choppy but rising, and that's shown by the pink to dark blue line. And then finally, the yellow line rising indicates that buy stop orders were helping to fuel the move higher. And those buy stop orders are shown, oops, wrong tool. Shown by these green dots, these numbers and the green dots. Buy stop orders all the way up. Iceberg orders shown by this E and the number of transactions. And cumulative volume delta. You don't really need that to see the all the green dots, the volume dots, market buy orders helping to drive price higher. So in the case of NASDAQ, I thought this was easier to read. Traders are buying calls. We know that. We just saw that with Hero. We know that larger traders are buying with iceberg orders, again shown by the rising light blue line, We know that buy stop orders are fueling this move higher, and then we know that aggressive buyers are in here with all these green volume dots. All right, so I thought an easier read in NASDAQ, a very steady mechanical uptrend up until about 1045. Let's just go back to Hero. And we'll scroll a bit on the chart. So after about 1040, 1045, traders continue to, or start, actually let's go back. So they continue to buy puts and they stop buying calls, and price consolidates, chops around. Let's switch back to the total signal. And that's pretty choppy. Put calls. So it looks like they have just steadily been buying calls. Zoom out a bit. So that activity really picked up around somewhere between 1 and 115, 120. Let's just see if that helps to go back to this 30-minute look back period. And not much clarity. All right, so I thought there was a pretty good confirmation this morning. Anyway, let's take a look at some stocks now. There were some better setups in stocks. So anyway, good strong rallies in the S&P 500 and NASDAQ this morning. And RJ wants to take a look at VIX. So we'll see VIX. And traders are buying calls today in VIX, shown by the rising orange line. All right, so that's VIX. There you go, RJ. All right, let's take a look at some stocks. So first of all, Apple was definitely in the news today. And traders were buying calls today. So let's go take a look at Bookmap now. Here's Apple. Quick shot up this morning, and then consolidation starting around. Actually, you missed the move if you missed the first 10 minutes in Apple today. Straight shot up, first 10 minutes, and of course pre-market. And then chop after that. Let's just go back to the Spotgamma chart, Hero chart, and we see that 175 is the call wall and the key gamma strike. Let's go back to Bookmap. And there's the 175 strike. And note all the liquidity at that level, the resting limit sell orders, and that tends to attract price. So maybe Apple will get up there sometime today. All right, the next is AMD. And nice steady uptrend in AMD continues. And traders are buying calls in AMD, shown by the rising orange line. And remember, there was positive news about AMD yesterday. Apparently Microsoft is going to help fund their development of AI chips. So AMD continues to rise, traders buying calls. Let's take a look at Google now. Not a lot in Google here. These large block orders, I thought I saw something this morning, a slight divergent short, but it really didn't amount to much. Notice Hero falling, and then price follows a little while later. These large block orders shown by this vertical line in Hero really kind of obscure the signal. And let's just see what they were doing. Probably, oh, that's odd. So they're in Google, they're actually selling calls and selling puts. So this large block order was a large block order selling puts. All right, let's move on. Take a look at Microsoft. And here in Microsoft, note the 310 key gamma strike. Looks like the price is chopping around that level now. And it looks like traders are buying calls and buying puts. Call buyers are winning, shown by the rising orange line. Total signal positive, and now shifting lower. Traders are starting to take negative delta positions as price has reached that 310 key gamma strike. So let's go take a look at Bookmap. Go to Microsoft. And for Microsoft, it looks like I need to add more lines to my spreadsheet. So there's the 310 key gamma strike, and note all the liquidity at that level. So there's the 310 strike, high liquidity at that level, and it looks like there was some liquidity at that level before the open, for the RTH open, and then more came in after. Limit sell orders tends to attract price, and now price is chopping around that level. So we'll keep an eye on Microsoft. We know that now traders, options traders, are starting to fade this move. Let's go back to Hero. So notice the potential divergence set up here. Hero rise falling, and price at a key level, the 310 key gamma strike. But I would certainly be cautious here. Friday afternoon, big bullish day. All right, that's Microsoft. Let's take a look at NVIDIA. So here's NVIDIA. Traders buying calls, and and selling puts, but not in a significant number. Notice the notional value for calls 377 million versus only positive 23 million for puts. So they're buying calls and selling puts, but it looks like the call buyers are in charge, moving price higher. Let's go take a look at Bookmap. And for Microsoft, note the bullish order flow here. All these green volume dots. Let's just take a look at CVD for Microsoft and note some of the pink dots coming in here in this consolidation, and now it looks like CVD continues to be negative. So we'll take a look at the subchart CVD, and you can pretty much read this just by looking at the volume dots, but positive cumulative volume delta. And it is negative because of this huge negative opening print shown by this massive pink volume dot there. But it does shift positive to neutral to negative as price continues to grind higher right now at this 310 key gamma strike. Now we'll go to NVIDIA. So NVIDIA, strong uptrend in the morning, long consolidation, and now moving higher. And let's go take a look at Hero again. And note the 282 call wall. And that typically is expected to act as resistance. All right, there's a question in YouTube, and it looks like Captain Price is kind of on his own there. Kind of off-topic comments. All right, so Alexander asks, what about Tesla to next week? I'm a day trader as far as stock goes, and that's what my focus is. I'm looking at a new plan, new process every day based on the shifts overnight in the gamma levels, and then watching how order flow is, what traders are doing, watching order flow in Bookmap and hedging flow on Spotgamma Hero. So I'm not really a swing trader, I'm a day trader for stocks. All right, so we're noting the call wall breach in NVIDIA. So let's take a look at NVIDIA again, that 282 strike. We'll go to Bookmap again. So there's the 282 level right there, call wall. And typically you would expect that that level to act as resistance, but there are a couple of factors in play here. First, time of day. Typically stocks rally, the strongest time of the day is the first couple of hours until about noon or something like that. And then the second is this is a single stock. So a single stock has, I think, more of a chance of breaching its call wall than an index, than the SPY or QQQ, SPX. All right, let's take a look at one other thing here. We can take a look at NVIDIA in the Spotgamma Equity Hub. Look at this chart. and talk about the call wall breach. So I'm going to zoom in on this level. So here's the call wall at 282. So when NVIDIA, when a stock moves above that level, all this call gamma goes deeper in the money. That's shown by the orange bars here. This is all call gamma, goes further in the money, and so the delta is increasing for all those calls. Market makers delta notional, remember they're short calls. For stock, Spotgamma assumes that traders are long calls and market makers are short calls. As price increases, they have to buy stock to hedge their delta exposure. So these calls, as price increases, are going in the money. Delta is increasing, and market makers have to continue to hedge their delta exposure, especially when traders are buying calls. So if traders are buying calls, all these calls shown by these orange lines are going in the money. Delta is increasing, and market makers have to continue to buy stock to hedge their delta exposure. And notice that these lines here are showing the rate of change of gamma. And notice how these lines start to level off as price increases. That means these calls that I was just talking about go so far in the money that market makers no longer need to hedge. They're fully hedged. And Brent talks about that quite a bit in various Spotgamma webinars, all available on, most available to the public on the Spotgamma YouTube channel. All right, so if NVIDIA continues higher, then it looks like the rate of change of gamma should slow down up around 300, and market makers' need to hedge will decrease, and that should slow down price. All right, let's go take a look at Bookmap again. So still a way, still a bit to go to 300. So again, there's the call wall breach. Price accelerates higher. Slowed down at the 285 liquidity and now moving higher. All right, let's take a look at Tesla. All right, so RJ asks for a stock in Spotgamma. Do they have the same diagram as they do with indices that shows the gamma per strike? Yes. So that's what I was just showing. One thing to keep in mind is Spotgamma makes a different assumption for an index versus a single stock. So for an index, Spotgamma assumes that traders are short calls and long puts. And so market makers take the opposite side of that trade. So market makers are short puts and long calls. And in the region of the gamma curve where the short puts dominated, that's the negative gamma environment. And then the region of the gamma curve where the long calls dominate, that's the positive gamma environment. And you can just look at any options chain, any information, and see that when you're long calls, you're going to be long gamma. All right, for a single stock, Spotgamma assumes that traders are long puts and or long calls. So this gamma assumption is different for a single stock. So market makers are always going to be negative gamma. So market makers are going to be short puts and or short calls for a single stock. And that's Spotgamma's assumption. All right, so here's Tesla, strong uptrend. Let's take a look at Hero for Tesla. And for Tesla, here is the 170 call wall. That was the target for today. And we'll keep an eye, I would say keep an eye on Tesla as well and see how it reacts. Note the time of day that NVIDIA breached its call wall earlier in the day, and it took Tesla up until now to reach its call wall. There may not be as much energy left in this. I think in this case, late in the afternoon at just around 2:30, this call wall has a higher chance of acting as resistance for Tesla today. And let's just see what options traders are doing. And they should be buying calls. And that is what is driving price. Tesla traders buying calls. And they're actually also selling puts. So for calls, 450 million. For puts, around 270 million, both positive. And add them together and you get about 720 million positive notional value. So let's go take a look at the Bookmap. And there's the 170 call wall. And there was some liquidity there. Some resting sell orders at the 170 level, shown by the heat map there. And note also the pink volume dots starting to come in, aggressive sellers. As price has reached that level. Let's go back and take a look at Hero. And note that Hero has leveled off. There's a very, in Tesla, there's often, and it's true today, a very strong correlation between hedging flow and price action. So the white line mirrors the purple line or vice versa. All right, so that's Tesla. All right, so there's a question in YouTube. When I say traders are selling puts, well, yeah, selling puts is a positive delta trade, so they are taking a bullish stance, yes. And that is a generally selling puts would be, again, it's positive delta, positive bullish position. They are limiting their upside to gain a higher probability of success and taking in premium. But as you know, selling puts, you're limiting your upside. There's only so much you can make. As opposed to buying a call, you are taking on that theta decay. You're paying that penalty, but you have unlimited upside. And there's a question about GLD. I don't know if GLD is in here. It's not on my watch list. We'll just take a look and see if it is in the list of stocks available. And yeah, it is. So there's GLD. Now, I don't have that in Bookmap. So it looks like traders are taking positive delta positions in GLD. And they're buying calls, shown by the rising orange line. So traders are buying calls in GLD today. All right, let's take a look at, we'll take a quick look at the indices, and then we will call it a day. So again, it looks like now options traders are in sync with price for the S&P 500, and it continues to move higher. Take a look at NASDAQ, and it's choppier, but the same thing. Options traders are in sync with price action, moving higher. We'll go to Bookmap. So Tesla struggles at the 170 call wall, and the S&P 500 continues higher. It looks like now it's past the ES 4150 level and heading up to the SPX 4150 resistance level, and continued to be fueled higher with stop orders, shown by the rising yellow line on the subchart. Take a look at NASDAQ. Price continues higher. Buy stop orders, cumulative volume delta moving higher. And now it looks like large traders have started to fade this move with iceberg orders, shown by this light blue line. All right, that's all I have for today. Hopefully I have answered all your questions. I want to thank you for watching. Thanks for your questions and comments. Have a great weekend, everyone, and I will see you tomorrow. Thanks again. Bye.